Hi everyone! Today is Friday, May the 23rd. My name is Anne-Marie Band and this is the Moneyball Morning Report for the Benzinga Pro platform. As usual, we begin looking at the E-mini S&Ps. Today we've got maybe new home sales and a couple of other things. Did read an article about the number of sales that are falling through for whatever reason, but I don't know how important that actually is in the grand scheme of things for us as intraday traders. So that's really what we're staring down. Jerome Powell speaks on Sunday night or Sunday afternoon somewhere. I feel like that's weird. So we probably have a little bit of expanded risk into the long weekend. Of course, we do not have anything going on Monday in the markets, and so there will be no Monday call, Monday morning report, but we'll be back to business on Tuesday. All right, let's take a look at the ES again. The opening range is about 21 points wide, right inside of yesterday's megaphone pattern. That's what we're staring down. We've got about 40 points of implied vol to the up and downside. Here is the weekly implied volatility move. That's 58.24. I get the feeling that we could have expansion. Now, yesterday I said, hey, listen, I think a lot of people are going to try and buy up the floor here in this range, but I think they're going to be disappointed. Well, notice they did try to buy up the floor and they held until the top of the range near 58.92. Remember, that was one of our targets. Fell right back down, closed, look at this, right in the Globex opening range event. And so this yesterday's floor of the Globex open is pretty important. That also happens to be the floor of this morning's Globex open or this trading day's Globex open. So 58.50 going to be a pretty important level. Below it, we test support. I suspect we could fall out of this range and build another megaphone. Expect the deep dips to be buy zones. What is trend? Down. What is momentum? Flat to mixed. Okay, and that means candlesticks will retrace each other, especially as we drift further and further away from this moving average. We could be in a mean reversion, so it could go sideways until we catch up with our moving average that should fall into somewhere in this opening range over the next couple of days. That being said, there's the exogenous shock here or there. What do we want to do? Big bounces, sell zones. Steep dips, buy zones. Do I think we're eventually going to head down here in some sort of mean reversion? Yes, I do. But as it sits, deep dips, 5,800, 58.15. If we lose that area, wait for it to recover that area, and then you can take the long up into the range. If you'd like to take a short, 58.71 looks like a great place to initiate a short. But if it rises above that area, it's got to collapse before the short becomes active, else it's a long back up into 59.08. Let's take a look at the NQ. E-mini NASDAQ 100 futures also sitting in yesterday's range, right? We had a bounce down, bounce up. The opening range is approximately 100 points wide, right? Which is pretty tidy. What is trend? Down. What is momentum? Flat, mixed, right? Where is relative support or resistance? We see that the implied move, the expected move from the volatility chains show 21,050-ish on the low side, 21,400-ish on the high side. Deep dips going to be buy zones. Where do I expect a deep dip? Over here to the left, I see 20,950. It could hold 21,000 and never get there. You could try the bottoming test here as a trade, but this wick below at 33 tells you that, 15, 20 points of a stop is really all you need in the NQs. And if it loses that edge, we're going to see lower ranges. All right. So what's the position? Deep dips, buy zones, big spikes, sell zones, we are still caught with the broad market in a very wide range. And so until something really cracks, we're going to sit in this hodgepodge mess. Let's take a look at the YM. What is the trend? Down. What is momentum? Flat. What do we know about those two things? We have candlesticks that retrace each other, and we are seeing exactly that. What happened yesterday? We had an opening range that is slightly below where today's trading range began. And so the opening range width looks like it's about, what is that, 126 points, something like that. What is the formation telling us? Probably mean reversion. We're sitting in a very wide pocket. The base of the gap from the tariff news on May 11 is 41,662. That's a short target in my mind. But we do have some volatility events sitting. I'm going to move that. Actually, I'm going to delete this one. Somewhere around 41,563 for an extended move inside of that gap. Eventually, we should fill parts of that gap, but who's to say when? You can obviously see that we've got a very noisy patch right here. Deep dips, going to be buy zones, big spikes, going to be sell zones. And that's what we're staring down, right? So if we are looking at areas where we might have a topping formation, I would suggest that's anywhere between 42,200 and 42,300. That's going to give us an area as a target for longs, or a rejection zone there as a target entry for shorts. On the dip, we could see, again, 41,500, but if we begin to bounce off of that zone and hold 41,600 or so, that will be a nice area to position for long. We just have to manage our risk very tightly. It is very important. If you're nibbling in to see if it'll hold, start with a micro, and then you can go to minis as trend takes over. All right, let's take a look at micro Bitcoin. Now, somebody said the other day, hey, I don't really like trading micro Bitcoin, doesn't follow Bitcoin very well, prices are different. Use the chart to trade the chart you're trading. Don't use Bitcoin to trade micro Bitcoin. Use micro Bitcoin to trade micro Bitcoin. So, yesterday, this is very, very interesting. Yesterday, the implied expected move was somewhere around here, 109, 110. You can look at yesterday's video. Bounced off, came below, came above, came below, came above, came below. So they are really trying to resolve. They are well outside of the expected moves from prior days, so we can see that we're trending higher. What is the trend? It's up. What is momentum? It's flat, right? Very mixed, not bullish at all. So if we're staring down something like that, we know that candlesticks will retrace each other, and we're in likely mean reversion. So bullish action should hold at the lower edge of the implied volatility move. Where is that? Anywhere from 110,100 to 109,400. All right, so what do you want to do? First place they're trying to build up the space is 110,500. So you can see buyers coming in there. But our structure shows high, low, lower high, which implies the move is probably going to come into our super trend line, which happens to be, let's see where that, okay, let's use this formation. Uh-oh, why can't I get this guy to move? Oh, because that's the super trend line. Knucklehead. Okay, so here is the opening high of the Globex for yesterday. That's why I have it as a particular target. Also running into that moving average that we like to see. That's 109,400. That's what I would look for the bounce. And it could get pretty choppy because here's the thing. We could move all the way back down to 107. It really does depend what the market's going to do, because this has been tracking the market a little more bullishly, but it has been tracking the market. So if the market gets a little bit weak, this is going to follow. All right. Right now, if we take the opening range trade, what we did was we bounced, tested just above it, broke below it, bounced, and then failed the line. So how does that look? One, if we're looking for a retest of a failed opening range break, one, we must be looking at lower highs. And then as soon as we close underneath that opening range, we can take the short. Beautiful, absolutely beautiful. So if you are staring the short down and you come into this zone where the implied vol move is on the low side, it'll be a place to take profit because buyers have been coming in there. Could it be a place to go long? Yes, but you've got 1,000 points of risk. So I'd wait it out and wait for structure. All right. Good looking chart from a bullish perspective, but it is in mean reversion. So the dips are going to make buy zones. Selling up at the top, you could do that. You could try the short up at the top at 112, but you're going to need about 400 points of risk, 400 ticks of risk. All right, let's go to oil. Holy smokes, we must have had some news, obviously. Okay, so let's take a look at what oil is doing. Are we sideways? You betcha, right? Very big sideways patch. Opening range very tight. We've got the implied vol move of $60.23. Looks like we're going to jam right into that. Let it collapse because the implied vol move for the day is underneath the implied vol move for the week calculated earlier. Traders are still going to try and buy around this $60 area. Wait for it, collapse down into the tight time frames. $59.90 is the implied vol move. So let it fade, right? Listen, the administration needs lower oil to jam the brakes on inflation. That's how they're going to do it. So whatever tinfoil hat thing you got going there to say, how are they going to get it lower? I don't know. They pull all kinds of levers. So let's not overthink it. Let's just trade what happens. Don't get offended because the market's manipulated. Yeah, of course it's manipulated. Everybody with money is going to manipulate how that money is spent. Roll with it and just play by the rules, right? And the only rule we have to work on is, how do I manage my risk? Because that's the only thing you can control. That's the only thing you can control. Nothing else. Look at them bouncing off that weekly implied vol move. Also the low of yesterday. So are we in a big range? Yes. What is the current trend? Down. What is momentum? Flat. Slightly up here. So dips on the edges. 60.23. Could we be building another megaphone? Yesterday, yesterday is sort of like a flag pattern. Today, we are trying to base through this area. Okay, so dips, potentially buy zones, but only into resistance. So you want to be careful. What are the edges above? $61.17. $61.56. Implied vol move, $61.76. On the upside, lower edges, $60 and $59.90 look like the edges we are going to hold. Okay, could we head lower? Yes. Will we head lower? Who knows? All right, let's go to gold. Gold had a pretty interesting move last night. Holy smokes, yeah. This is some kind of news. I don't know what it is, but gold on the stinking run again. Holy smokes. What is the trend? Decidedly up in a very fat range of motion. Decidedly up. What is momentum? Up. Look at this range break. The weekly implied vol move for the end of the week, they have blown through it. I mean, I think we've got ourselves maybe a four sigma move here in gold. I'll calculate it later. My eyeballs are just telling me that right now. Here is old resistance, 33.51. Let's see what next week's vol is. See if we can get a reading on what might be going on. Hang on. So there's an $87 move from next week's vol that puts us at 33.83. Let me clone this one. Oh. Clone. All right. 33.83. Right? So we'll move it right there. Remember, these are ranges, so you want to watch. Could it be that's where it's going? That's what it's telling us. That we're likely to see next week. I should have probably done this one and put it up there. That's probably a better bet. So I know why I picked that calculation. 33.83 move. Sorry I'm taking so long this morning, folks. All right, so here we are. Big spike into prior day's high. Sellers come off the range. You know, I think there are a fair bit of people that are trying to short oil. I mean, trying to short gold. And they're not doing too good doing that. So what are we staring down? What is the trend? Up. What is momentum? Up. So dips or buy zones. Where's the best dip? The high of yesterday's Globex Open. Look at where the traders are bouncing. 33.22. That is going to be frontline support well above the opening range. If we lose 33.22, the structure is going to change and there are going to be more traders looking for deeper value below. Right now, dips are buys. If we come into $3,335, the first group of buyers are going to go, all right, let's see if we can do it. We could be getting pressed by short sellers that are just a little bit eager for this chart to break down. But listen, central banks continue to buy oil because, they continue to buy gold because they're printing money. And the more they print money, the less gold they have, the more their currency is going to lose value. So that being said, this is what we're looking at. Buy points anywhere from 33.22 to 33.15. If it loses that zone, we're going to have a deeper reversion. 32.97 was the original weekly implied vol move, and you can see that we are $50 above that. And so there are a lot of traders underwater. And that could push it even higher. Let's go to SPY. Golly, I'm taking too long these days. Holy moly. I gotta check out the news. All right, straight through the weekly implied vol move and in the gap, ladies and gentlemen, in the gap. Okay, so here's the thing. Do or die for the buyers. If they can't hold this area and they don't recover above 578.20, we're going to fill this entire gap in. Now, you guys know, I think this is where we're going. I've said it. I don't know if it's going to go down in a straight line, but something's given. And so if you're thinking to yourself, hey, I could have bought long there, this is why you hold your stop very tight in these kinds of motions. I believe the bond auction 2 days ago is a big, fat, hairy deal. Like a mole on a face that you can't ignore. So that, why did my head go there? I don't know. You gotta forgive me. Maybe fears of being an old woman. There you go. Because, you know, we all get moles that grow on our faces, that grow hair. All right, side note, and for those of you that are younger, getting old, not for the faint at heart. All right, sorry about that digression. Here we go. I do believe the bond auction is a very big deal. Very, very big deal. Or people are treating it like a big deal. It's not really, because debt to GDP is still well inside what Japan is. All right, but we need, whatever reason we need, to take a pause and a breath in the market. And so if we fill the gap, friends, we're going to $564.85. $564.85. Do I expect some kind of bounce here? Yes. Do you want to jump in and cascade this short? Have at it. It's just not a trade I would look for. I would look for resumption of the move into mean reversion and see what we get. Or as price action moves, we'll be able to see a short-term bounce because now all the overnight inventory will be short. So we're looking for a short-term bounce that either puts us back in this range or a short-term bounce that sends us right through the gap. Okay, that is quite the move. I don't know what it is, but I'll find out afterwards. All right. Whoa. What is trend? Flat to slightly down. Momentum, essentially flat to slightly down. We are not at the top of the gap yet, so there's more going here for the downside pressure on the Qs. There's a line at 501, but we are in the gap underneath 503. So this is going to fade. This is absolutely going to fade. And so what we are staring down is a potential move from $490 to $487. That's if, the wheels come off the bus. We are well below the opening range. Traders, wow, look at that. What is going on? That is something, right? So buy to cover. A lot of these really weird, wacky wicks on the horizon, but bounces are clearly sell zones in this environment. The problem is the bounce could be all the way up at $516. So what's the trade? Sell the very highs, 518, 519. Potentially we could have 515 to 516 on the bounce. That's going to be an ideal range if it loses it. And the rundown into support, we should see the first group of buyers show up at about 501. But wait for price action to tell you it is going to rotate over before you jump in here, especially if you don't know what the news is like I don't. All right. Take care. I think we had new home sales come out at 8 o'clock or 7:45 or something like that. That could be it. We'll see what happens. Stay frosty, guys. It's a Friday. Guys and gals. I use that word exclusively, like mankind. Stay steady. Watch your risk. And I'll see you on the streams. Looking forward to Midday Moneyball today and Lunchbox Trading. Take care.